Hello, guys. How we doing this evening? Once again, the timing's a little bit dynamic. It's gonna be like that until mid-October. I do want to let you guys know in advance, except for the weekly outlooks on the weekend. That was a one-time thing. We'll definitely stay consistent on that end. But as for the PA reviews, they will always be there. It just will never be at the same time. That's truth. I'm doing some catering for a movie set, so it is very unstable at what times they want to eat, and they are picky motherfuckers. What can I say? Thank you, Trix. Appreciate that very much. It's nice to see you in here, as always. Let's talk about today. Right? We talked about it during the weekly outlook that I was expecting with our news profile, a classic week. We could very well see a classic sell week after our initial push higher. As we can see, we did not require anything more, right? Very definitely. We've been very bearish yesterday. We had no reason to believe we were going to be looking for a retracement. Why is that? Because our first discount in efficiency has not been reached. So until this point in reach is reached, I am going to remain bearish, to this level. Now, it doesn't mean that I can't trade longs. It simply means that I have different, what's the word for that? Expectations for longs and shorts. I will expect shorts to be smooth and aggressive for longer distance, I guess, for more movement volatility-wise. But if we look at ES here, let's actually just go ahead and draw at the same range on ES. We'll notice that the first discount in efficiency here can also be hit while the other one isn't, right? It did not happen today, of course, but something like tomorrow, we can see SMT based on this level. And yes, if one of the levels hits it, I do treat that as potential SMT. I didn't want to mention that because I don't think I've mentioned that specific aspect before. Now we'll go down in our time frames to our 15-minute charts and look at the daily structure, which for me today was pretty clear. Now, once again, just like we did on the previous day, right, forming relative equal highs, we did the same thing at current day's high here once again. What does that mean to me? Well, it means that once we'll go up, these are going to be clear objectives, right? There are always two sides. Right now, what I see is this is just additional confirmation that our move lower is nothing but a retracement. Why? Because we're leaving levels that are too clean. And these levels will be huge objectives once we flip back around, and they are huge draws for price overall. But to stay specific on the context of today, since there was no SMT at the lows, I didn't consider this any possible low of day, which means what? This is all accumulation. And right here, we have this whole move, right? Once again, it's never important to understand when the manipulation starts. The only important part of it is, all right, when does it end? When does the structure of my daily candle form one of its extreme? And for me, that was definitely when we took out London High, right? We did initially have some SMT, but that was cleared up. Let me get my little dot. As you can see, that was cleared up directly, actually, when NASDAQ induced current day's high. And we can see on the lower time frames, we'll have a lot of SMT here at 9:30. ES was almost at the current day's high, but not for NASDAQ. Now, we had our London framework, of course, which gave us an objective to London low. But as we dive down in the time frames here, let's go down to the 1 minute. So once again, higher time frame bearish. Daily movements tells us that we have manipulation higher, which means distribution lower, confirmation of bearish pricing. All right. Just want to reiterate that. And once we get right here, where did I see SMT this morning? I believe I saw SMT this morning, and I mean, I'm seeing it, but that wasn't validated, right? I might have gotten confused, right? The SMT between these swing points, not necessarily with any precision, but as we can see, definitely SMT. But at 9:30, we invalidated all that SMT, which I guess I missed. That's actually pretty sad to see. All right, but overall, it really doesn't change a thing. You still have your higher time frame understanding that is ready for everything. And we also have SMT very near current day's high right here. So as long as this level remains unmitigated, what does that mean? It remains open, right? We don't take it, then this SMT is valid, which means that, yes, we do have an additional confirmation to go short. Now, some people discussed in chat this morning that since we took out London low, what was it, 933 here on NASDAQ, there was counter SMT. There was indeed. But it's not like London high remained open and then we took out London low, which then means, hey, we have a statistical confluence. No, we basically completed this framework, even though we did not complete it on ES, which in this case was our more bullish asset, right? Clearly, from the SMT, we can see that aspect. Where is it? I think it's like these swing points. Yes, exactly. So with ES being our most bullish asset, having SMT at London low in that case just tells us, hey, ES is still more bullish than NASDAQ is, right? Quite uncorrelated these last 2 days, but it is what it is. I mean, I don't really have a reason for it. I don't have an explanation for it, and I don't care to have an explanation for it. I just trade my moves, and whether it's high resistance or not, I don't need to change anything. Just go break even a little bit quicker. Overall, I didn't want to say that's why for me, I don't care if we form counter and set SMT in this context. Does it make my setup here, as you can see, right, breaker block, unicorn, does it make this setup a little worse? Absolutely it does, right? And we already ran quite a bit and already reached what was a main objective, right? We had 3 objectives: London low, current day's low, which aligns with Asia low. And then we had, I do have to go back to 15 minutes for this. Actually, let's do that now. I was looking for shorts, and what do we have? Well, if we look at the 15-minute chart, we have current day's low, sure, and then we have some very nice lows here, which are previous day low. And as we can see, we have some other nice levels. Why do I call these nice levels, and why do I regard these, for example, this one, with more importance than any of these? Well, it's very simple. I look at relatively equal levels. So, for example, I understand that this level here with these relative equal lows is a great level to look for. And I look at levels that lasted often and caused big reactions. I learned directly using ICT concepts, so I knew these levels as impulse price swings. Now, I didn't learn any of this other than the name from ICT content. I just noticed that some lows just cause big reactions, and these are going to be important levels for me to take profit at in the future, right? So that's the only thing worth looking for. And as you can see, all of these levels, these are always drawn on my chart. Like, let's say I go short and then my trade reaches TP1 and I want to know, okay, well, how am I going to manage the rest of my position while I draw all of these levels, just like you see on my chart right now. And then as soon as they get hit, I just delete them. So now I understand that these are areas where I want to take profit. I see a cluster right here. That is a great idea. So here I'm looking for it to accelerate to these levels. TP here. Here is a great TP. Here is a great TP. All right. I just wanted to explain. So I'm going to leave these levels on our chart as we go back down to the 1 minute, just so we can see from our setup. Because if we look at this entry, we already have one thing wrong, right? With the fact that we already ran quite a decent bit. And we can look at ES here and see that there was an earlier entry, but there was no entry PD array on NASDAQ because this IFVG was invalidated. Now, if you took the entry on ES and actually traded that on NASDAQ, it would have been somewhere within this candle. Just to be pessimistic, let's call it the close of the candle, right? You waited to the last second. You would have had a way better trade, basically, than I had. Not with that stop, though. With a wick big like that, I basically did not use that wick as my 3 PD arrays. But if you're going here, your 3 PD arrays would be fair value gap, order block, and inversion fair value gap. So technically your stop should be all the way up here. I personally this morning used this one because if we trade back above the 930 open, that basically invalidates my trade, right? We can't have this range invalidated. So because of that, I adjusted my stop, which meant that with this entry, taking the entry on ES, based off ES on NASDAQ, would have had almost 2R at current day's low. So this would have been a great trade. Now with that same stop, I was looking at current day's low and saw, hey, that does not offer me enough risk to reward, but I don't expect it to retrace deeper within this initial range. I expect it to run aggressively. Now, of course, we did have quite a bit of consolidation before we did do that run, but we further had that run. So what are my options? Well, as soon as current day's lows was hit, I go break even, and my main objective is previous day low. I'm going to mark it out as such just to differentiate it. The previous day low right here. You know what? Why do I even have an indicator if I don't use it in this case, right? I have it on my trading setup, so it's not on my review setup usually. And you'll notice that like this, we have exactly 2R at this level. But for me, this wasn't really an area to take profit. I did take a small portion once we got down here because as you can see, we pretty much reached previous day low, but we were 4 points away. So when I see this, right, and I'm always thinking in terms of framework and my quarters, right, my implied dealing range, if we want to use the pretty name. But once we reach that last quarter, I need to see it run aggressively to my target. And if it doesn't, we're either inducing this level, which means consolidation is to come, or this is a wrong level. This is not actually our target. Since my initial target for this framework was previous day low, and then we induce it and retrace back into it, once I saw this candle open, I decided to take profits. I took profits around this line, and it was just a tiny bit below the open of the 953 candle. So did that mean I have 1.7? No. I'm trying to de-risk. So what did I do? Did I take a 50% partial? Hell no. I took out 1 out of 4 contracts. Simple as that. No need to complicate it in that sense. You can go very, very easily. Now, afterwards, you could have just held on. I personally mismanaged my stop loss today. See, it's been going great the last 2 days, guys. Really, really, to be honest, fucking great. To be sarcastic, to tell you guys, right? But I mismanaged my trade and missed out on all of this. So it's almost just a break-even day for me on some accounts. And on some accounts, I had too much risk because I scaled in, which means I basically had a loss. I had like a 0.8 R loss on those accounts. But on that one, I mean, that's pretty, right? And then once again, like my main objective is previous day low. In this case, I get my 2R. I'm already break-even as soon as current day's low was taken. And then, oh, okay, you're chilling. Oh, I see this cluster, as I said. So this is a nice area to look for a take profit. I'm going to remove this one. These are basically relative equal lows. And then you have another level here. You have another level here. And if you don't want to take profit, just use these levels as areas to trail. For example, as soon as this level is met, I can easily trail my stop to this high, which I see is, once again, talking about impulse price swings, it is a high that formed this move lower, right? This leg. And at this point in time, I can see it's the high before this move lower. Then once we take out the next one, I can look to trail it down. So I can at least trail it down to here. But what I like to do is trail it down to here. What I tell myself is as soon as we hit this objective, worst case scenario, it's like if I close my position at this level, which is something I am okay with doing. So then I keep doing the same thing. So as soon as this level is met, then I place my stop at this level. And as you can see, that's where I would have gone and stepped out on a trail. And that means 4R realized was my potential, what I personally missed out on today by trailing my stop too quickly, right? I trailed it here. I trailed it here. Then I was like, oh, that is pretty. That is beautiful. And when we reached previous day low, I tried to trail it aggressively because I thought we were going to run through it and reach for these levels. And I got stopped out, which is really fucking amazing. Pretty upset I missed a short today. Tough to see. Wouldn't you call today's trade a normal setup? Just felt weird to me. Yeah, absolutely. This is absolutely a normal setup. I have bearish higher time frame. I have bearish daily structure, which indicates that I should expect a bearish day. At the open, what did we do precisely? Open high, expand lower. I don't mean to, what's the word for that? To break your spirits, tricks, but this is what a textbook setup looks for me. And the truth is, in the delivery, it really fucking sucks. All right? Really did. We saw consolidation the whole AM session a lot like yesterday. And why? Well, you can give a bunch of reasons. A lot of overnight movement, what's going on in the world right now, I don't know, uncorrelated assets. I mean, whatever the reason. Where's the unicorn? Right here. These two beautiful lines. And you might say, hey, that's not overlapping to my breaker block. No, but is it within my personal settings of threshold overlap? And what is that? It is maximum distance away from breakers to consider gap overlaps. 12 points. So I need my fair value gap to be 12 points. Now, of course, if you use the specific entry, that's not 12 points away. That's 20 points away. But did I ever say it needs to be 12 handles from the exact area here? No, it does not. Is this within 12 points? Yes, it is. This is a valid unicorn for me. It is that straightforward. Truth is, this is a trade that I personally took today, but the actual setup, I personally missed it this morning, would have been to look at ES, see that 931 is the entry, and really just short the 931 candle. And that would have been before London low, even better of a setup. The actual stop loss should be here, but I would not have, especially if you entered at the top here, this doesn't seem like an overly big stop. So you have no reason to look for, hey, is there a good tighter stop I can look for? And see in this area, even to current day's low, it still offers 2R. So this, what we see right here, is what should have been the trade for today in my book. This initial short, but these can be hard to spot. See, myself today, I missed it. That's why I need to set alerts. I add alerts to the indicator, actually. Why do you consider the 915 candle invalidated? 915 fair value gap. Is it this one? Yes. Well, because we closed through it. So I don't know. A lot of people use gaps differently. As I said, I learned my logic based on the ICT framework of fair value gaps and all of that. And as you can see here, we have a bullish fair value gap. When we close below this level, it means this is no longer a bullish fair value gap. It is invalidated. But at that point, we also have inversed fair value gap. So once a bullish fair value gap is inversed, so invalidated, it now becomes an area where you want to see support, exactly like support and resistance. So now it is what we call a bearish inversion fair value gap. But once we close back above it, it just invalidated. It doesn't re-become a fair value gap. We close through it, which inverses it, and then we close back through the other level, which just means this is no longer something I'm looking for. It is balanced in this area, and this is no longer an IFVG. You can do what you want, say, hey, look, there was time distortion between. I mean, I used to, I did some thesis about time distortion through PD arrays. It was actually a very fun study, but was it a useful study? Fuck no. That's my honest opinion. Whenever you guys hear me swear, you know it's from the heart. Let's just say it like that. It is my way of conveying a strong point. Thanks, I used that as my entry today. Guess it was wrong. Well, I mean, is there really a right way and a wrong way? That's what I hate about how this space has become in the last year and year and a half. I mean, people are attacking themselves. Like, the most popular things going on right now is a very popular affiliate marketer insulting other traders, and those other traders being actual scammers who can't trade. I mean, that's what's popular in the space right now. I'm sorry, I'm just venting here because I really hate it. But yes, based on my understanding, based on my model, this would not be considered because it is not a valid PD array, pretty much. But as you can see from this one, we never close below it. That's the difference. So we don't care if it trades back above it. Who cares? We never close below it. And when we close below it, it becomes an inversion fair value gap. And since we have an overlapping breaker, you could use that as an entry. Of course, you could trade directly on ES, but especially since NASDAQ is the weaker asset at that specific moment, right? Based on recent SMT, then in that case, I would definitely look to short NASDAQ no matter what. I tend to just trade NASDAQ anyways. How do you determine the current daily range? Yeah, I only showed it once, but it is using my indicator. And I basically set a session, right? This is a session ranges indicator for Rice Statistics. Thank you, Nico. Appreciate it. Have a great night, bro. And I basically set a session that I call current days, and I set it from 6 p.m. to 9:30 because I only trade the New York session, and I want to see the current day's high and low. So that's how I see the current day's range. If you're talking specifically about the movement, it's what we did at the beginning of this call, which is really just all about structure and structure through the lens of AMD, which is accumulation, manipulation, distribution, what I know as the power of three. Does that make any sense? Hopefully it does. All right. I'll take that as a yes then. Do we have any final questions? I mean, we can look at some potential long opportunities. Of course, I only discussed about the potential trades. And I mean, PM session, you already hit all your objectives. Are you really going to look for a continuation after a sizable move? Sure. You know what? I mean, we could consider it. You would have had a lunch framework. So, I mean, we can definitely consider it. You would have had a short opportunity here that failed very clearly. But as we all know, if I'm shorting this unicorn and I see consolidation at my entry and then we expand through it, what do? I go break even. So this is never a loss in my book. This is a break even trade following rules. Here we have another potential entry, but at this point, you notice that we're just consolidating. We didn't even reach these relative equal highs here. There is no reason that you could expect that price will just decide to start going down here. So for me, these aren't valid trades. They are just too bad within the range. For me to consider taking a continuation in the PM, it needs to retrace to a first discount and efficiency of at least the current session range, and current session, by that I mean the New York. And if we just draw a premium and discount quickly, we'll notice we never even return to a premium. So for me to consider this move over, I would need to retrace to my first premium in efficiency. I like to use a 5-minute, or if it's too large of a time like this, right, it's pretty much the whole AM session, I like to go to a 15-minute chart. In the morning, let's say you were bullish. As I said, for me, there is no valid long except if we consider previous day low. Because we'll notice here, let me just bring previous day low on ES as well, that at the time that NASDAQ took out previous day low, there was now SMT at this point. So this bullish setup would be valuable in my book, right? We have a lot of targets to the upside, at least looking for a retracement to all this consolidation, this low resistance movement, looking to target this initial buy side as a potential objective would have been definitely something to consider. But see, your stop here would be 1 PD array and then 2 PD arrays. And is that a fair value gap? Right here, it does seem like it is. Yes, it is. Which means that you would have had a very tight stop here and gotten stopped out very quickly. In this case, I just did want to mention that this, in my book, was the only valid long setup that we saw for the day. No, I'm not going to consider trading during lunch because I personally do not do that. I look to not take a trade past 11:30 in the morning session. How you identify your premium and discount through the dealing range. I am unfamiliar. Well, okay. Oh, you said dealing range. I read daily range. I am sorry about that, Eco. Okay, so dealing range is not a concept I abide by. I understand the concept. I know what it is. I just don't believe in it. And why is that? Well, you guys know by now. And if you're new, well, welcome. And you're going to learn right now. All of my opinions about tradings and I like to not have an opinion about trading concepts and such, except for one specific theory that I really hate, especially because of the marketing they do, but whatever. I base my opinions and my knowledge off of data, statistics, which means that if I tell you that for me, dealing ranges are useless, it's because statistically speaking, they are shit. Now, if for you, they help you better visualize things and they help you trade, then that is a valuable tool that you should keep in your arsenal. But I'm never going to recommend to a beginner to try and understand dealing ranges because in my book, they're useless. I like to refer to recent ranges. I like to go to a 5-minute chart, look at the most recent range. And if I'm looking at the PM session, I'm going to look at the current New York range, which means the highest high and the lowest low between 9:30 and 1:30, whenever I'm there at that point. Okay, I'm looking at overall movement, overall symmetry. So for example, this for me is all one movement. I don't look at the specifics of everything. So if, let's say I was looking at short at the high of this, let's say 9:30 opened up here, then what range would I be referring to? Well, in this case, it would have been the current daily range. I'm not going to draw it with precision because why? That's the move I'm looking to reverse. That's the most recent move. So if I'm looking for a short continuation in the PM, I see this entire range. But in this case, I also like to focus the more important swing point, which is going to be the one at the New York Open. So if I'm looking to take another move after this move down, I'm going to be looking for move lower, retracement to first discount, continuation. Does this make any sense? Hopefully you're not too sad about what I said about dealing ranges. If they help you, as I said, do keep that concept, right? They might be a nice way for you to interpret what's going on in the charts. But personally, I don't refer to any of these concepts. I don't use any specific time frame candles as ranges. This is also something that I do not like to do. I use swing points. This is something that has been used for the last at least 30 years, right? Pivot points and ranges formed from those pivot points. And premium and discount levels are based off what? When people buy and when people sell. And is it more important to refer to specific times? Yes, that makes your concept stronger. So I refer to specific times for my ranges. Just wanted to know how you identify the ranges which you use for your premium and discount. Well, yeah, as I just explained, pretty much that's how it goes. Any final questions before we call it a night? I really want to try and keep all these PA reviews under 30 minutes because no one watches them when they're 45 minutes, an hour. My pleasure, brother. My pleasure. All right, well, on that note, we're going to call it a night. Thank you all for showing up. Lovely to see you all. We're going to have another PA review tomorrow. Once again, variable time until mid-October. So specifically until October 15th. I will always be changing the times of the PA reviews, but never the days. And it's never going to be, hey, all of a sudden it's 5 hours later. The maximum it will be is like 3 hours earlier or a possibility of up to 2 hours later. But as always, they are recorded and posted on YouTube so that you guys can review it if you missed it. On that note, though, I'm going to call it a night. Bye, guys. Good luck trading tomorrow, and we'll speak more tomorrow night at our PA review. Bye, guys. Have a good one.